Alrighty. Good morning, good afternoon, and good evening as it's TGIF. It's the end of the week. This is Doc from North America. Just another, just truly entertaining marketplace we have here. Lots of interesting things happening constantly. Metals complex is trying to rally. It's really fighting. They fought their way. I think it was the. Let's see which one's that. Let's move that over there. There we go. I think that the silver was really impressive. Let's see where we're at here. Let's get the J4X up there. That's the gold. But check out the silver. It is battling. They must realize it's just undervalued because they are battling. There's no doubt about it. They're battling to try to hold it up. Now that's going to come out in the weekly, and you see the weeklies are very firm here. And here it is. There's the daily. And the daily has been trying to go down for a couple of days now. And it has been fighting tooth and nail. Yesterday they threw in a red and a green at the very end where we thought we were going into that sell, and it just bounced back up. And you can see here today, it's back into the plus, not very firm, but at least it's trying. It's a real fight. A lot of people know that the silver complex should be much higher than where it's at. If it wasn't for the Federal Reserve constantly beating it up, it would be much higher. So, let's get the chat line up there too. Let's see, where's it at? There it is. There's the chat line. So, the dollar itself, a little strength this morning. We've seen some good flight away from, what's the way to look at it, is flight away from the dollar, which is nice, to see it try to retrace a little bit. Hey, Robin. Hey, Metho. Hey, George. Morning. Let's see if we finally pop up in silver. And gold. Well, they're trying without a doubt. They dodged it last night. That looked like they were going to be in the sell, and they really just got that little green dot in there, and it was, if they had been down today and this thing coming down, it would have been it. It would have been not again. But here we are, a second week in the buy here, and it is battling. It's trying. It really is trying. Who do we got? We got Greco. Greco's there. Buongiorno. Gomezigana. Gattini, Gattino, Greco. So, let's see. Yeah, that's pretty much the name of the game there. We will try to throw a little Italian in if we can. Where I live is very Italian throughout the last 100 years, so, we do know some Italian words and understand some Italian words. So that's, we just jumped right into the metals complex. Lira don't exist anymore now, but you know what? There's really talk of coming back to the Italian lira. There really is. There's a when they lost Draghi as the prime minister, there was serious talk of coming back. That would be interesting. And there's Ribeiro, hello. Euro lira. Yeah, wouldn't that be fun? Now we see the Turkish lira. And that Turkish lira is interesting. I guess you could say it's interesting. But it is not the, it's a much more volatile creature. What is up with this? I keep on getting this low disk. You're running out of very low disk space. Let's see. Click here to see if you can free space. Let's click there and see if we can free space. Let's see. Because, yeah, we've been getting a lot of messages about disk space. Let's see if it'll do that. So, it is interesting. Rodrigo. Yes. Ask any question. But that would be very interesting if Draghi, with Draghi gone, There's serious talk of is that what they're talking? Possibly in 2023. Yeah, I think Italy needs it at this point. Tell you the truth, they need to come up with something for the southern, what do they call it, the southern states of the European Union. They definitely need that. They need to come up with something. Hold 1 second. I just need to grab a bottle of water. I realized I didn't set up with a bottle of water. Be back in 15 seconds. 14, 13. And we're back. Just needed a bottle of water there. We are back. Yeah, the southern states in Europe just are getting beat up from the strong euro, and they really need to do something about it. And it doesn't, it just doesn't seem to. I don't know. The European Parliament just doesn't seem to be very touchy-feely to the other states. All the states. Seems like it's geared towards the north and not anything else. Draghi himself hurt the last of the banking system in Italy. Not as if it takes a great challenge to recreate a banking system, but he did really pressure the banks to the point where Italy doesn't have any major banks anymore. I guess they're all local, smaller banks type of thing, So, all right. So you can see there. The metals complex. Let's jump over to the euro this morning. You see right there, the euro is trying to lift up. No, that's that's the S&P 500. Where are we at? There we are. We'll do this. We'll take a quick look at the dollar index and then go to the euro. Let's do that. There's the dollar index. You see the dollar index is perking its head up. It's got the red-green going on, but it's still, it looks like it's going to push itself into the sell. On J4X, you can see same situation. I was looking at that earlier this morning. Right there. Same situation, pushing down. The dollar index is lifting back up again, but you can't see it yet. You can see where the Hinky Ashki is trapped in between yesterday's bar, so that just shows you right there some strength. Whereas you can see the green line is still heading down. By deleting unused programs, opening programs and features. Let's see what that does. So at this point, that is exactly where we're at. And it just, like I said, it doesn't seem to stop. They are pushing very hard to try to get the currency to, really, 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 go to the, I guess you would call it the, what do they call it? The lira. Come back to the lira. That would be a big, 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 big help. Big, big, big help. So, all right. From here, let's jump over to, let's see now, right there, minimize that, click that, there we go, and now we'll take a look at the euro. But if anybody wants to see anything, just shout it out. You can see here the euro is trying to move down. It's got some pressure on it this morning, but we're in the buy. This thing looks like it's Friday. It's going to stay in the buy. They're going to have to really smack it down past this cyan or light blue line to really get this thing to fall back into the weekly. It's going to take a lot of work. So we're probably, obviously we're going out with the euro closing on a weekly buy and a daily buy. So the weakness is something you really want to buy at this point in time. And you can see it there. It's very strong for 4 days with green hinkies. We are getting that rolling over, and if you see this thing come in here and do the bottom end of this, you want to start buying into the euro without a doubt. Like I said, you want to go after the weakness at this point. Take the opportunity of the weakness, and that is really where we're at this point with this currency, in particular the euro. It's Friday. I don't have any particular desire to push the everyday strategy, the communications. I will go through these currencies, but I would love some questions. It would be a lot more interesting, just for it being Friday alone, just to kind of change the norm. If not, I'll just go through them. We'll go to the British pound, and we'll go through the Canadian and the Turkish Lira. We'll do the whole rhythm if that's what everybody wants. You can see here, same situation. It's trying to press her down. But again, this product also climbed into the weekly buy throughout the whole week. And this will be the first time since, mid-April. We went into that weekly sell up in the 130-ish area. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's 10 there. 11, 12, 13, 14, 15. And it looks like 16, 17, 16 full weeks in a weekly sell when it came to the cable. The cable's, finally making an interesting decision. And, it looks like a reverse head and shoulders here, too, at the same time on the screen. All right, and let's put it up on J4X. Make it bigger. You see it has that same look of the reverse head and shoulders. Maybe it's going to come back up and challenge this area. Would be nice. Let's see what the weekly looks like. Good old Dan Niles is on the television. Good hedge fund manager. And you see there, it's been the same way for weeks. It's been firm on J4X. It's been trying to warn us that there is some buying going on for us on Chicago Quant. We just kind of we're much more delicate, I guess you could say. We try to not to trap anybody in anything particular. So a lot of times, unless you're trading in the options or the binaries, it's tough to want to get into a buy. In other words, if it's not in a daily and a weekly buy in our work, we're usually much more conservative. But that is the process. All right. From there, we will drift over to the Swiss. Let's do the Swiss. And the Swiss is just quiet. Look at that. It doesn't even want to budge. They don't really want to give up anything. That's been in a weekly sell now for, this is the 5th week. So, it's been in the sell since this point. Oh, I don't mean to move that. Let's put that back. It's been in the sell since this area here. And then you can see it was in a daily sell. We had a little buy here warning. And then boom, back into the sell again. George says, looks like the December gold is holding its support this week on the hourly. It's the best above the 1800. Let's take a look at the hourly. Like I said, I'm interested in just going around seeing what's going on. So I have no problem going in and looking at stuff. And let's see if we can find an hourly. There's an hourly right there. Let's put gold in there. There it is. And there's the hourly. We've been in the sell. It's trying to get back into the buy here now. Look at that. But we've been in the sell since here. Since what's today? The 12th, right? So for 2 days we've been in hourly sells. And then it kind of perked up. And you see here they're trying to. Let's see. Maybe there's more to it. Let's see what the setting is. There we go. This is going to be a little bit different. There we go. So it went into the sell. It was in. Let's scrunch this up a little bit. There it is. We went into the sell here on the 10th. This is 24-hour now. You see, we went into the buy here. What a wild spike that was on that buy. That was great. And we went back into the sell here. Stayed in the sell all the way, even there, because it was a red dot. So it stayed in the sell until here to buy, and then it went into the buy on the fourth one. 1, 2, 3, 4. 2, 3, right here. Went into the buy there and had that nice ride there. And then we went into the sell here. It was a fair little ride. It was only like $4 or $5 over a 5-hour period. And then it went into the buy, where? Right here. Missed that buy. Went into the buy right there. Pushed into a sell again there. It was a whipsaw, gave up a little profit there. And then it went back into a buy and made all your money back. And then it went into the sell here, and you know, you made a little money from it, like $3 or $4. And now you can see here it's trying to jump into that daily buy. Hourly buy. That's a good point. Thank you, George. That was pretty cool. I just look at the gold in general, and I just have a hard time accepting the fact that it's down. And you can see here it's been in a daily buy since all the way back to July 22nd. We are finally getting into that weekly buy, finally, since the 1850 area back in June. So, you know, they took it from 1850-ish down to almost 1700. It was a $150 drop on the daily and the weekly combined together. So we would like to see, you know, this thing get into the daily or week, you know, the weekly buy. It's nice when it does it with the red dots, but it's still in a buy, you know, because that means that you want to buy that weakness, and you know, maybe there's going to be a good pop on Monday or Tuesday. I would dollar cost averaging and over the next couple of days, you know, and then see where it's at Wednesday, Thursday. If they keep on climbing in here and we get into a buy again, you would assume. There's 2 red dots. One was a volatility dot with a green. And then today it's doing it again, but it's really not breaking down. It's just keeping, you know, just steady. Let's see, which one was it? You just lost something there. Right there. There it is. Where are you? Oh, it must be over here. Why can I not find that? There it is. Okay. Yeah, so I guess what it really comes down to is I wonder what the hourly looks like in the silver. Let's take a look at the hourly in the silver. Like I said, I'm really hungry to explore other products. No, close. Cancel. Close. Let's go back to the hourly. And there it is right there. Let's put silver in there. SI SEP. And there we go. This will be interesting. So it caught that nice move up on the 9th. After that nice sell-off on the 8th. Yeah. No, the 5th. And then threw itself in a sell for a little bit. And there was the buy, and it lost it. And then the sell was a winner chicken dinner. Because it stayed in the sell all the way to here, I guess, right there. Then survived a little bit and then went back into the sell again. Wasn't much of a move. You know, it's trading in 10-15 cent ranges, really. Then it got into a buy here, which was pretty interesting. It caught that same spike. And then you had your sell there. And stayed in the sell until it went into a buy here. It got up to here, but it was very tough. And then the sell. Is that the sell right there? I think that's the sell right there. So it's a 2, 4, 5, 2, 4, 5. Yeah. So it went into the sell there and caught that nice little down action. And now it's doing the same thing as gold. It's trying to get into the buy. Look at that. That's a lot of movement on it. Interesting. I am fascinated by it. All right. from there, we'll go back to the currencies only because no one's asking a question. You ask a question, we'll go to whatever the question you have. And let's take a look at the currencies again. And we just got done looking at the Swiss, so let's go to the Turkish Lira. We'll look at dollar Turkish Lira to start off with, see if it's above 18. It's trying. Boy, that thing is locked right underneath the 18 mark. They don't seem to be able to move it now. I don't know what that means more than the fact that the last time the government had it there, they did everything in the world to try to get it to go down. I don't know if they have as much goodwill as they had back then. They had a great strategy at the time. And that was they were giving away free option puts for all longs, or at least majority of longs. So that made it pretty good, and they would cash in. And then the Central Bank of Turkey had to ask the parliament to raise taxes to pay for it, and that was about it. It wasn't that complicated. But at least they weren't propping up, the whole price, only a slice of the price. The difference between the gain and the loss. That's what the put was. So now it seems like that has died. And that's really where we're at. We're trying to, see that calm down, All right, now let's take a look at. Will we really see the dollar Turkish Lira calm down? I doubt it. Let's take a look at the euro Turkish Lira, which is more of the currency action than it is the like the index. The dollar Turkish Lira looks like an index the way it trades. You can see here they've been pushing even more higher. Still in that buy. 4 weeks now in a buy. And that is like 3 full handles. 21 was like the high, all-time high. Whereas a dollar Turkish Lira, 18 is the all-time high. So we're sitting at that now, at the all-time high in the dollar pairs trade. Yeah, it's unique. Very unique. I understand they're sitting at like 180% inflation. 180. Not 18. 180. So there's a lot of issues going on there. You would assume everybody's trying to hedge themselves on some level. And I understand the government's making it harder to hedge themselves, so they're limiting what they can use to hedge. All right, from there we'll go to Canadian. And there's the Canadian. And Canadian's in a daily sell now for 3 days. Right there. It hasn't really gone anywhere. You see the weekly is trying its best to stay in there. Now with this pretty much unchanged, you would assume oil is probably just down a little bit or unchanged also. So let's take a look at that. Oh, and we can do that by going over to J4X. We'll use that. Let's see, what are we looking at there? That's the CAD. So let's put the CAD in there. Right there. On a daily. Now you can see also that the CAD's been 3 weeks in a sell in the J4X. And let's just take a quick look over on the energy sector there. And there's crude oil. Like I said, it's pretty much unchanged. Just sitting there on the edge. So there's no real passion. No Bella. No Bella. And you see here, what else can we say about that? I guess that's about it. It's just not, it moves with the oil market. When the oil market does well, a lot of times the Canadian does well. It's always a nice, follow through type of thing. Now looking over at the J4X, let's take a look at that weekly again. You see 4 days in the sell here. The green line's been underneath. We've been 3 days in a sell on Chicago Quant. And here is the weekly. See, it's going to be like 3 weeks, and green line's been underneath since like here, I guess it is. right there. So you had your pop. Well, you had to wait for the red. So you're not long for this, and you're not short. And then you get the red, and you're short because the green line is underneath. And we've done some odd stuff with it too. You can see here, went into the sell back then, had a buy last week, and back into the sell again. There we are. All right, from there what do we got here? No questions. From here, let's see. So that's the what is that? That's the CAD. So from the CAD, we go over to the South African Rand. That lines up with the metals market again. And where is it at? Right there it is, right there. Dollar, South African Rand. It's like sideways the way the Canadian is. Just a little strength in it this morning, nothing major. It's been in the sell since there. Let's see it over here. There it is right there. It's at the bottom end of the range, as you can see on J4X. And it's trying to lift back up again. Now, we really don't want to see the South African Rand go up, because that means there's going to be pressure on gold to go down. That's not what we're looking for. And we're really hoping to see the metals complex start to really stall out when it comes to selling it, and see if they build up the buyers and demand. All right. From there, we'll go to the yen. And you can see just real quick on the gold right there. You see that's, just quiet. It's trying to go down a little bit. Still in a daily buy. Still above the weekly buy. All right, from there, we jump into the yen. And there's the yen. See, it's trying to lift up, but our work is not cooperating, and it's a daily sell since in here in the 37 area, 36 and a half, 37 area. And you see here, it's been 3 days. This is the third day. You can see the weakness there. When we look at it on a weekly basis on J4X, right there, it's been in a weekly sell for 3 weeks, just like Chicago Coal. There's not been too many stories this morning. Just to deviate a little bit. On zero hedge and so forth. Moldova is talking about. Oh, wait a minute. Ex-President Medvedev from Russia warns Europe of possible incidents at nuclear facilities. Ugh. Oh, they're saying that people who've been, CDC says here in the States, people exposed to COVID no longer need to be in quarantine. Huh. %50 retracement. They're looking for that. What do we got now? Doing that again? I heard that. Need to do. Oh, okay. Alright, let's see what we can do here. Reduce some of the stuff. And what else can we talk about when it comes to this type of action? Let's see, Doc. Maybe new armed IRS agents to be hired will help support metals. You would think crypto is more, Because if they can get their hands on your equity, you know, that would be, kind of a freak out right there. But that could be a possibility. They definitely are. The whole thing, none of it makes any sense. They're trying to basically slow our economy down, I guess, or I don't know. The Democrats don't make any sense anymore. They haven't made a lot of sense for a long time, but they're really not making any sense now. But that's kind of funny. I kind of agree with you. I'm not sure what they. I would think that if you're really dodging the IRS, I would think that the real game would be is like the cryptos. They can't exactly. They can see that you move something, and you might want to park it in that, and especially when they have calls and puts, you can protect it. So I mean that would be another one. So that's a good question. I'm trying to think now. I first of all, I'm not confident that it's all going to play out so as much as everybody thinks it is. In other words, they're going to pass this, and by the time they've got it all passed and they start to hire, the Republicans should have full control of the Congress, and they could stop the IRS from getting the money, a lot of the money. So I think that's part of it right there. But it's there's a lot of strange stuff that's going on there, and there's not much you can, it's just not, it's just not. There's way too many crazy things to try to figure out. I think we have to see it first before we try to, basically. Worry about it. I think that's really what it comes down to. I mean, that really is what it comes down to. All right. What else can we say about that? I just don't have a strong enough opinion yet because I just don't believe it's going to happen. That's the problem. I really think that they're going to find ways to basically stop that absurdity. Crude oil is down like 1.25%. It seems to be very volatile. It's always volatile. That I've always mentioned that in webinars that the crude oil sector has its own volatility. I mean, there's not many what happens is that when you look at the whole enchilada, as they would say in the United States, when you look at the whole process, you have, let's see, how does it work? You have something like the world uses like 100 million barrels a day. And when you have 100 million barrels a day, there's a lot of volatility that develops from that. Excuse me. So, that's part of it right there. It's a very, very odd, the whole situation. I mean, that is really, really odd. When you have that much, so basically when you have that much of volume every day, if there's 1 million barrels off, and everybody's using 100 million, I'm just throwing a round number out there. That has a great effect. I mean, all of a sudden, that's 1% right there. If there's a situation where it's 2 or 3 million barrels, there's 3%. It doesn't take much to move that market. You are at YouTube. I am at YouTube. Fauci is hearing your sneeze. Oh, no. Well, I think they've stopped all that craziness now. Yeah, I mean that's a real. I think they're at the end. I think they're really at the end. I just saw that headline where the CDC says that they're not forcing people into confinement anymore. None of it. None of it makes any sense. The whole thing's been very strange right from the beginning. All right. So yeah, back to the oil. You know, if you miss, you know, if 3 or 4 million barrels goes off, that's 4% of the marketplace. All of a sudden, people are scrambling to find the oil. Do you see 100 plus again this year? If you were to take a guess, oh, without a doubt, yeah. I believe I've been saying it here. I believe the range is basically 90 to about 120. And we've just seen the 90 challenged. Went down to about 87, 88, something like that in the front month. And now we're at what, 93, 94? Where are we at now in oil? Let's take a look at that. Right there. Yeah, we're trading in the 94 area. Yeah, I see 100. I don't have much of a problem. Also, the only thing I'm saying is that I think you want to wait for a weekly buy. You know, when we were in the weekly sell, we're in the weekly sell, but when we started this weekly sell, and every time we went into a daily sell, we knew it was a good trade. We've been in a daily buy now for 5 days, and it's gone from like 88 basically to 95. You know, so know that the pressure is there. We want to see this thing get into a weekly buy. Let's see. I think so too. Just in the fundamentals, even though they don't mean much these days, I think the fundamentals mean more in the energy market because it's used every day, it's needed every day, and so it's forced. Oh, they blocked you from saying something. So it's really a necessity. It really is. And because it's a necessity, it really is, it really is an issue. I really see that way altogether. I really do. Like I said, you imagine if, just in general, how many, we can look it up, how many barrels of oil is used a day in the world. I think it's in the 90s or something like that. But just using like 100, just to round it out, you remove 2 or 3 million barrels, that's 2 or 3% in a day. World uses how many barrels of oil a day? Let's see, 88 million. Okay. It is estimated that the world consumes more than 88 million barrels of oil per day. Let's see, what is this? Do you want to allow this following program to update software on this computer? There you go. So yeah, when 88 million barrels a day, you lose 1 million barrels. You're talking about what's that? Something like 7/8 of a. You're talking about it. What is it? Something like 0.78%. You lose like 3 million barrels a day. You're talking about 2.75%. So I mean that's why the volatility is the way it is. And there's no getting away from it. We're using more oil, not less. So it seems like the grains they can't manipulate as much either as like the metals, which they do. Well, they have a reason to do the metals. Remember, the way it works is that let's see, how's it best to describe that? The way it really works is this. Funds incorporate. Funds have a manifesto. They have to invest the way they incorporate. Okay, so they have a you open up a fund, a retirement fund, mutual fund, you're a hedge fund type of thing. You're an investing fund of some form. You incorporate. In it, you have to create a manifesto in your incorporation. If you don't follow that manifesto, then there's pressure. You get sued. Okay, it doesn't matter if you're making money. So it's easier to sue than trade. And so then you go to the next step, and that is most funds have written into their fund in the manifesto about inflation and about the price of metals. And if they reach a certain thing, then a certain price, then you have a removing of say stock portfolio. Well, quantitative easing is designed to stabilize the stock market overall. So the last thing they want is people selling stocks. They don't care about gold or silver because it's only 1 or 2 or 3% of the portfolio. But they do care about stocks, and they want people, because they're retired on it, they're banking on it, so forth. They're borrowing against it. So it's more important to disturb. Like, you're not going to see, grains and so forth written into a hedge fund unless it deals with commodities. But you can see a lot of funds will talk about inflation. Commodity funds, currency funds, stock funds, they'll all talk about inflation. And the first thing they go to is the old fundamental. If gold does this, then we have to do that. We have to increase our metals holding by 3% and decrease our stock holdings by, say, 7%, something like that. Okay. So there's great need by the Federal Reserve to basically keep the metals price down. And we've talked about this so many times. If you would tell me in 2006 or 2007 about what is going on in the market in 2008 and 2009, and then say, Doc, where do you think gold would be and where do you think silver would be? And and what they're doing in 2010 and 2011, if you told me, if you speculated and you got it right what they were doing, where would the metals be? I would have told you that gold should be between $5,000 and $10,000 an ounce. I would have said that they would be supporting the not the Bass Brothers, the Hunt Brothers high of $51 on silver. Silver would be using that as a floor. And so that's written into all these funds, these thousands and thousands of funds. It's written into their financial manifesto. And so the Federal Reserve needs to keep the metal price low, or it instigates, or it accelerates, or creates enormous shift of equity. And that's the last thing they want. They have no interest whatsoever to have a shift in equity. Their whole objective is to have stability. They do not want anything less than stability. So there's not much of a reason to take that too serious. You see what I'm saying? And so that's really what it comes down to. I hope that makes sense, because I try to explain that, and it does sound odd, but and then you would extrapolate in your head. You could say, "Wow, that means if I go look at all these, look at a bunch of funds and watch what they're doing, then I know ahead of time what they're doing and what the market might be doing." And that's right. That's what they do. You don't think Goldman Sachs and J.P. Morgan and the rest of them don't have a good idea what the general trend? I've seen headlines. Let me interrupt right there myself. I've seen headlines over the last week or two saying that the Goldman traders cannot get it right. They've been losing money left and right. In other words, they've been wrong for weeks now, because metals have stayed down and the stocks have been ripping through the roof, and they were looking for, like in other words, the inflation is 8.5%. They're expecting a ceiling, like a channel, to keep it down, and instead now there's believing that it's going to go to. Let's take a look at S&Ps. I think we have a Fibonacci on it, and let's make this so you can see it better. Okay, so November is the all-time high, right there. I think it was like 800 or 700 and something. All right, so let's see. Yeah, so let's make the 4,773 it, and what we'll do is we'll put a Fibonacci in there. So what they're assuming is a lot of these funds or institution traders have done this, what we're doing right there. They put the Fibonacci in, okay? And they trade by analysis. So let's just change this color a little bit. We'll go like that. There we are, just so you can see it. So now they're back to 50%, basically. They've come back to 50%. Now, when it got to 50% last time, they felt very comfortable back in the early June to sell it down again and make a low. And then it made a higher low here, and that was really bothering them because it took out this low, but it didn't take out that, and started to lift again. And they were like, wait a minute, why are they lifting this thing? So then it got up into the 3.38, and they thought it would stall out there for about half a week to a week. It did, and then started up again. Now they've gone to the 50 percentile. And they're complaining. The institutional trading desks that are left at the brokerage houses are complaining that they can't do anything right. And well, they're trading like the Fibonacci and so forth, and they're not using Doc's math. But I don't think anybody in the institutions are using my math anymore, because if I don't feed it to them, they don't get it. So in other words, you have to apply for it. We'll give you a free, couple of weeks of it free, but you have to pay for it. And so I don't have any. Robin and I don't have any institutional clients. We just haven't gone after that market anymore. It's too much work. You get paid well, but it's not worth it. They're on your back all day long. It's easier to deal with, smaller operations. So that's what's going on. So when it comes to oil, the manifesto's in there on that too. If oil's at a certain price, be long X amount of stocks, especially the energy stocks. ExxonMobil, Schlumberger, Royal Dutch Shell, British Petroleum, so forth. But they're all written into those manifestos, and that's what is keeping them going. Now it's kind of interesting. You see here, we're banging for the last 2 days. Is it 2 days now? It looks like it. Yeah. 3 days ago. Wednesday it touched it. Thursday it went through it and came back and closed below it. And today it's back up above it again. And so it's playing with the 50 percentile. And, with metals, metals are being pressured not to go up. The central bank is fighting to keep those things down. This way they don't liquidate the stocks. They got to adjust. If they drop if 1,000 funds dropped 7% of their equity funds, their stocks, that would be very tenacious to the market, and the Federal Reserve would be enormously angry. And that's why, matter of fact, there's a headline out there this morning. Let's see if we can find it. There it comes. Yeah, there's a headline this morning that the hedge funds are squeezed tightly from this action. Let's see if we can find you the headline. Rhine River 1 centimeter from danger zone. Let's see. Ex-president. Yep. CDC. Hedge fund bears capitulate. There it is. Right here. There it is right there. Hedge fund bears capitulate, unleashing biggest net buying and short covering at Goldman Prime since May. We've been seeing stuff like that for a couple of days now, and the Goldman traders, just begging for a change in the market because they've gotten their heads handed to them. So, That's the whole game right there. So there's no need for them to manipulate the grains and so forth. They can do that just as easily. They'll create paper grains out of nowhere on you. Remember, also, grains have to be delivered physically, and gold and silver seems to... I mean, every time someone tries to repatriate their gold, it takes like 2 years to do it, you know? I mean, you're talking like 15 or 20 tons. Why does it take 2 years to ship 15 or 20 tons to Europe or Asia or something like that? It means that they don't have the inventory. And we've talked about this too. Back before quantitative easing, at the COMEX in New York, then the metals exchange, there was a how was it? It was for every ounce on the trading floor traded, there was almost 1 ounce in the vault. So in other words, if they traded 100,000 contracts for the day, or let's say 100,000 ounces for the day, they traded way more than that, but it's just a simple number. 100,000 ounces for the day. Well, then that meant that they more than likely had something like 99,000 ounces in the vault. It was almost 1-to-1. It was very close. Traders would look at it. They would decide what to do with it, the whole bit, Let's see, what is it? Metho says, with volume, I can see the charts. Oh! Yeah, I see it too. Okay. I just looked over there just to make sure. Charts. The Dukascopy volume. Yeah, you can see that volume. And let's see, which? What do you mean? Oh, what do you mean? Like in the metals? Like let's go. Let's see. Let's take a look at the metals complex. Where are you? Right there. There's gold, and you can see the volume there. I think this is a net, so it's like 313 plus contracts traded. But now, in these times with quantitative easing, if there's 100,000 ounces traded for the day, we're lucky if there's 5,000 ounces in the vault. That's it. What's that? Isn't from Dukascopy. What's not from Dukascopy? Remember that volume is like a... Here, I'll highlight it so you can see the workings of it. It's called... Ask bid volume. That's what that is. At an indicator, it's measuring the bid and offer volume. That's what that is. So that doesn't show the ounces per se, but they put a report out every month, and I used to report it. Remember, it was like 14. It was like 14. How did it go? It went from like less than 1 ounce off, at parity with the volume. It went to like 10 ounce, like 3 ounces, and then it went to like 5 ounces. So if there was like 100,000 traded, there was only 95,000 ounces in the vault. Then it got to like 20. Then it got to 100. Then it got to 1,000, and we stopped paying attention to it. So in other words, for every ounce of gold in the vault or traded, there was only like out of 100,000, or let's say out of 1,000, there was only 1 ounce in there. So on 10,000, there was 10 ounces. On 100,000, there was only 100 ounces. I think the last time I watched it, it might have been like 13 or 1,200. This is like 3-4 years ago. I stopped paying attention to it. It didn't mean anything anymore. The one you see on Dukascopy? No, that's the bid offer balance one. That's what that is. One of the traders here likes to watch it, so I put it on there. I thought it'd be interesting. It's from Dukascopy, yeah. But it's not the whole volume. It's just the difference between the bid and ask in volume. So it's kind of interesting. You can see that the thing increases. Here, let's make it big so you can see it. So you can see it got up to 750 as they were buying gold. And then when they started to sell gold down, it fell down to 300 and something. Low there was 200 and something as it's being sold off. And if this turns up, when it turns up, here, let's move this over more. When it turns up, like you can see here, it turned up and it went down in value. Then here this bottoms finally, and it goes up. I didn't pay attention to it that much. I didn't find it to be that good an indicator, but it's interesting. And one of the traders here likes to watch it, so I stuck it on there. And at times it's kind of interesting, you know, where it takes off. So in other words, if we're in a buy like this, and you see the greens, I start to think somewhere along the line it's going to start to bottom and come challenge that area, and it does. In this case here, we're in a sell. Notice it goes down to the lows, and it goes sideways. And then when it starts to take off and takes out these highs here, you get some equity appreciation. In other words, it goes up in value. And then when it drops underneath it, and this drops down hard, it's telling us that the price will go down, and sure enough, it does. So that's what's going on there. It's the whole market, but it's the bid and ask. It's looking at the differential of the two. So that's what we're looking at there. But you know, if it takes 2 years to repatriate gold to Germany or Britain, and it's, you know, talking about 15 or 20 or 30 tons of it, you know, it's obviously not a physical delivery boat problem. It's a physical delivery get the gold problem. You know, go find it. Where is it? So, you know, they probably, you know, what they do is the Federal Reserve, who's playing this game, keeps the prices low so that they can buy up the ounces. And they try to reduce the demand for the stuff. So what you have is you have a lot of people, the average person's buying gold, the hard gold, you know, the actual physical. And then what happens is that, you know, they're stockpiling it. So I think to a great extent everybody's got most of their gold back now. You know, I don't think the United States is holding anywhere near what it used to hold. And that's pretty much where we're at with that whole thing. All right, that sounds pretty good, doesn't it? So that kind of resolves that. Let's see. Oh, what's Metho say? Metho says from where Dukascopy gets the numbers of volume, probably from the exchange. They're looking. It's a formula about. Here, let's take a look at it. What's it called? We can take a look at the formula. Let's find the formula for it. You can get a better feel for what we're looking at. So it's called Ask Bid Volume formula. So let's put it up on the screen here. Ask Bid Volume formula. Indicator. There it is. We're moving that over. There it is. Understanding the bid and ask size on a quote, a stock quote. Okay. When looking at stock quotes, there are numbers following the bid and ask prices of a particular stock. And same thing with gold and so forth. These numbers usually are shown in brackets, and they represent the number of shares in lots of 10 to 100. Orders pending trade. These numbers are called bid and ask. Okay, yeah, we get all that. Let's see what the formula looks like. All right, here it is. Difference between bid and ask. The bid size is the total amount of desired purchases at any given price, and the ask size is the total amount of desired sales at a given price. The bid size is determined by buyers. Yeah, we get that. Where's the formula at? There must be a formula here. Say you would like to buy 3,000 shares. Okay. You can purchase 500 shares offered at $13.68. Okay, fine. But leaves you 2,500 shares unfilled. You have $13.68 as a limit. Your bid is $2,500. Will become the new bid price. However, if you need it fill right now, you would instead enter a market order. Okay, there's got to be a formula. What is the formula here? Here, let's put that in there. We're just going to say, you know, what's the formula for this thing? Indicator formula. Okay, here we go. It's an oscillator. Oh, here is it. How's it calculated?
You've probably heard.
No, let's go back to this. There it is, right there. How to calculate it? Just show us the thing. Ratio. Bid-ask volume ratio shows a relationship of buyers versus sellers. So that's what they're looking at, and I guess they look at a steady price. They're not really showing us the volume, but they're obviously subtracting one against the other. And that gives you that number. Notice it stays pretty steady, too, when you look at it in these products. Bid-ask ratio, let's see if that says it. So plot 1 is the, I guess, the bid-ask ratio, and plot 2 is the zero line. So that's the, so gold does the same thing. All of them do. We look at them in all of them. And they do it in stocks and so forth, and gold volume numbers are from the COMEX. Yeah, exactly. And who knows, Dukascopy, if that's spot, you know, and I think they show spot. Because right now, see, it's trading at 1794 on Dukascopy. And the futures contract, we're watching the December contract. So let's go over to that. Okay. Okay, there we are. And let's see, where am I going again? That's right, we're going to the there it is. Here's gold. So December gold is trading at 1802 at the moment. And Dukascopy spot is trading at 94. So what is that? That's 6. That's 8. It's an $8 premium in the futures contract right now. So they're using the same formula and they're doing it on spot, and I guess people do it on, you know, gold. Let's see if I can generate one off of the COMEX. Let's see, format, add. Well, we got to get out of here. It's past that time, but this is interesting. We can go after this again on Monday. Oh, there it is. Let's see if we can find bid-ask real quick, just to get a flavor of this. Bid-ask ratio. There's bid-ask ratio, not bid-ask volume. Let's see if we can find bid-ask volume. There it is on the bottom. Style. Let's go histogram. There's already a histogram and it's not showing anything. Let's see if we go like that and widen it. It's not really budging anywhere because there should be a red histogram. So they don't even have the volume. We're not getting the volume correctly for them to do the calculation. And this is a daily. So Dukascopy is like, you know, showing you the, see, it says there volume ratio, and it's like right there, it's zeros everywhere. See it in the little boxes? Zeros. All right, traders, we will try this again on Monday. So we're going to label this as the bid-ask volume. We'll call it that today. That's what we did. We looked at technical markets. Oh, that's how we go. There we go. So this is Doc from North America. Everybody have a safe and a smart weekend, and we will catch you all on Monday. So happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Be safe, be smart.